Hello, everyone, and welcome to your Daily Five. This will be for the Daily Five on October 12th. I'm recording it, though the market is still open on October 11th. But I think with the information today, we'll be okay unless price does something very, very extreme. So I'm Leslie Jouflas, and Trading Live Online is my website and a couple of books. Unfortunately, this one you cannot get in print anymore. If you'd love a copy, I include it in all the courses on my website. This book is available. You can find it on Amazon, and it covers a lot of the patterns that I show on your Daily Five. And then if you like what I do, you might check out, I have a new course, Harmonic Patterns combined with classical technical analysis. And I do have a special on it right now. So feel free to email me if you're interested in that. Today, what we are going to be looking at are the indexes because I think they're at really interesting places. Sometimes in technical analysis, we don't always get a clear-cut picture of what the market direction might be in the very near term. So sometimes we have to be a little bit patient and wait for the price to really tell us. Well, this quote up here, I've been using this a lot lately. It's really one of my favorite quotes of all time by Jesse Livermore, famous trader from the early 1900s into the crash of 1929 and into the early 1940s. But he said there is only one side to the stock market, and it's not the bull side or the bear side, but the right side. So that just means that, whichever way the market goes, that's the direction we want to be poised in. And if it changes trend on us, we want to be ready to do that. Let's get looking at some charts now. I've got a variety of charts from the S&P 500, the NASDAQ, the Dow Jones Industrial. We're going to look at the ETF for the Russell 2000, the IWM. So let's get started. Okay, we're looking at a chart of the S&P 500, the futures on a daily time frame. Now, I've got different trend lines and things drawn in here, so let me just give you a quick kind of overview of what I have. First of all, coming down from the 2021-22 high and the trend line coming along here, and we can see where price started to trade above and do some retest. From there, I've taken some trend lines coming up this direction. One is from using the open and closes, is one's from the absolute low. So they come up here and see they end up just a little bit of difference in price there, but around the same area. Now this head and shoulder pattern, here's where things really get interesting. So this head and shoulder pattern on this retracement up. So this retracement high was a retest of the March 2022 high point, but the market was still, in a downtrend at that point. And so it tested that level, fell away, had a retracement. You got to mark in a head and shoulder pattern. This is where the measured move target would be if price continues to the downside. And head and shoulder patterns don't always get the target. There are no patterns that have measured moves that get the targets 100% of the time. So the market came down, had a break of this support line here. You can see where it tested these trend lines, retested that break, then came down through the trend lines, but look where it landed. And so I think this is what makes right now the analysis just a little bit, which way is it going to go, up or down? So here it found support. If you notice, this is a really interesting area. This 4,200 level in the S&P 500, I mean, look at how many times that was tested, and I've talked about that on many other videos. But if we look at the price action, we see it get above 4,200, come back for another test, and then here is where it really starts the breakout. And that's right where that low a few days ago found the support, and we've seen a strong rally to the upside. Little gap area here, you can see where that consolidation was around that gap area. So these lows right down here in the S&P 500 futures, and you can look at a SPY chart on this, but that's right at the 42.35 level. So that's a really uh, important uh, support level to be monitoring right now. And then with this head and shoulder pattern, so in other words, let me back up. In other words, if the price breaks that low, we're likely to see more downside, and possibly that's going to be confirming the downtrend because we have the high here, lower low, lower high, lower low. So what we don't know is if this is a ABCD corrective buy pattern moving to the upside and we continue the uptrend. In order to do that, stay with me, the market is going to have to break through this trend line. So this is going to be an important trend line for a couple of reasons. One, the ABCD pattern breaking through that with very decisive closings above that trend line is going to say, okay, this ABCD pattern, the buy pattern, was a corrective pattern in this uptrend. With head and shoulder patterns, generally, if there's a failure of the pattern, so we got a little bit down, didn't get to the measured move, found support up, then that's generally a strong buy signal. So we really want to watch that trend line, and we also want to watch these lows. Now, if we take a look at the SPY on a monthly, so we're going out to a longer view of it, we can see that the market traded up to this resistance point that I just pointed out on the futures chart. And then here's where that 4,200 level was. So you can see how important of a level it's going to be for the market to hold this level. There were so many opens and closes around that level. So last month, in September, we can see we had a big long bar to the downside, generally around the 50% mark of these types of candles, maybe a little bit higher, maybe up to where the low of this bar is. We might see some more resistance, but getting up through this resistance level marked in right here, so those would be the highs from August of this year. Let me look at that. July and August highs, a close above there, and we're likely going to see, I think, new highs. So, a little bit different view on this. Now, one thing that is interesting to me is the RSI right now. So this level here is just really representing that the market is finding resistance. The RSI is showing us, it's not quite ready to be really bullish yet until it gets above this line. This line down here, this is a bullish line, but this is sort of a bearish range. So again, we have that, which way is it going to go? Well, we're just going to need a little bit more, evidence in our analysis. And that's why I'm mapping out these different levels. Now, let's just take a scenario that this breaks to the downside. This RSI is likely going to come down, and it may even, breach this support level, which it's had for a very, very long time, maybe come close and test it. If it moves to the upside, then this line should be broken and the RSI should be moving above that line up towards this upper resistance. So adding in yet another view with an intraday chart, looking at the S&P, we can see some of the past of what's happened here. There's some sell patterns up here, different ranges formed. This had a little bit of a false breakout to the upside, turned around, and then here's where the real breakout came. You can see the last couple of days on this rally to the upside. Look where the price has come. It's come right into this gap area. In fact, I like to use yellow circles for gaps, so I'll put my yellow gap circle right on there so we can remember that's where it is. So the next level would be testing the gap and closing the gap at this 44, 43, I think is the low, 44, 43 and a half on the futures. You'll notice that that's coming into this 1618 extension. So I'm using the high of this last swing down to the low, and it's showing me the retracements to the upside and then also the Fibonacci extensions of this full length here. So the 127 and the 1618. So if we move again to the upside, this is the next level. You can see these lows here, right around in here, looking in that area to see if either we get resistance or if the price is able to just blast right through it, then we'll look up a bit higher. But I would be expecting some potential resistance coming in here, a test of that level. And now we're going to take a look at the NASDAQ on the daily chart because this has a bit different view than what the S&P is showing. So you see this line down here. Notice how this did not form that AB equals CD buy pattern. I'm going to see if I can clone this real quick to show you what that would look like. That would have been right about here. But instead, it's formed this support. So we have this horizontal support line here. So this is going to be the important support for the NASDAQ to hold right now. And the NASDAQ is getting, let me take these off so we don't get too confused. There we go. But we can also use a trend line from this high. Let's go across. We're going to use this high right now and go across here. And maybe we have some type of triangle type pattern forming on the NASDAQ. So again, the same thing as the S&P. Break below here, it's going to be bearish. A concise break above here is going to be bullish. The Dow, I think, is very interesting. This is the Dow Jones Industrials on a daily, but I'm using the Dow Jones E-mini contract. I can just sort of see swings and things a little bit better on this symbol. So again, going back to the highs, the top of 2021, 2022, we see the decline. We see a rally back up into this sort of resistance area. Test back down, and then look at the big ranges on here. It looks to me like really this whole thing is some type of a big huge range. There is the A, B, C, D buy pattern, same as the S&P. Remember the NASDAQ didn't quite get down there that far, but here's a support line here to be watching on the Dow. And the same thing with the Dow. We can just use a simple trend line, cross here, and look at how much farther away this is from this trend line, the NASDAQ. So it goes in this order of who's closest: NASDAQ, S&P, then Dow. Dow is the furthest away. And also notice that the Dow is just retesting this level of resistance. This is where, price held a support here and broke. It broke, retest, more break, and then it's still hovering around there. So it's not as strong on this last rally as the S&P and the NASDAQ have been. So that is definitely something to keep an eye on. Maybe check, some of the sectors that are related to the Dow Jones Industrial. The last chart we'll look at today is the Russell 2000 ETF. IWM is the symbol. Back on August 9th on your Daily 5, I did a segment talking about the seasonality of the Russell 2000, kind of gave a heads up. That seasonality window is really into kind of November, December, even into January for small cap stocks. And so there is a big range forming, and it's still a big range. We never know for sure what's going to happen with price or anything in the market, but we can get a pretty good idea using some solid technical analysis methods. So the IWM now has formed within this range. It has formed this ABCD buy pattern. So the lows of this range are going to be very, very important. and the highs of this range are going to be very important. So if the seasonality window, which would be bullish for small caps, starts to kick in, we're going to be seeing this ETF start to really move up towards that upper trend line. If things become bearish, then we'll see it break down below this trend line here. So that's something that you might want to be keeping an eye on. And if you have some lists of some of the small cap stocks within the Russell 2000, you might want to start filtering those and have, a watch list. Well, thanks for watching today. I always appreciate you guys coming by and viewing the video and leaving some comments or questions. And I do try and check back and answer any comments or questions in there. So thanks again, and I'll see you on the next Your Daily 5.